Hello and welcome to the first video of the tutorials, I guess, on the Sierrachart Ninjatrader studies. So in this part, I would like to introduce each tool and talk about a bit what it is and how it is derived, and based on what, because there's still some confusion as to what are the particular parts. So basically, what is available to you are the three studies, right? So the studies are called ET options GEX, ET options ladder, and ET options trading plan. By the way, this is really important that if you are putting on a chart all these studies, it is important that you place it in that order. So the GX, ladder, and trading plan, because if you mix the position of these indicators, you will get some errors in the sense of some lines are not going to be visible, and they are covered by the other indicators. So basically you can place them whatever you want in relation to other studies, but in relation to ET studies, E-mini today studies, it has to be in this order if you want have them on one chart. So GX, above it ladder, and above ladder trading plan. Okay, so first let's start with the trading plan. So I'm not going to dive into the strategy itself, but just to explain what it is. So basically what we are looking at here is, for one, there are two colors of these two lines, so one zone, one line. They can either be green or red. So basically the direction, so the sentiment is either green or red every single day. And what is important, this study, so the ET trading plan, is it's not something that changes during the session. It changes only once, about 2 to 4 hours after the RTH close. So when the US session closes, sometime like 2 to 4 hours after US session closes, there is the automatic update for this structure, and you will get all these lines either red or green depending on dealers. So this here is the sentiment based on the dealers. I will talk about it in a minute. So the color of these lines, and basically the direction in which we want to trade, in particular time windows, is bullish in this case, and this is based on the dealers. You can also see here sentiment is bearish, but that doesn't affect the color. So the sentiment is based on something different than the dealers. So basically we have let's talk about the our sentiment indicators. So two of them, the dealers and the sentiment, are located in this study, right? So they are located within the trading plan study, and the color is based on dealers. the sentiment is something different in sense of it measures a different aspect of the options data. So we are trying to estimate what was the overall distribution of buyers and sellers, from the options perspective, and the dealers is our estimation on what is the inventory, or what will be the impact of the options dealers inventory. So this sometimes is conflicting. So like here you can see bullish and dealers are bullish and the sentiment is bearish, but sometimes they will be same direction. The third metric of sentiment is in the other study, and we'll talk about it later on. But here in this study, we have these two metrics, which are also updated with all the levels after the US session ends. Okay, one other thing that you can see here are these time windows. So it's called trade windows. So it will always be from 3 a.m. Eastern time, so the beginning of European session, and it ends at about 6 a.m. And also you can see that there are two colors within here. So it will be a bit more important, and I'll talk about it in the strategy video. But for now, I'm just explaining the times of these windows. The second one is a bit shorter, and it starts with the RTH open. So here it's 9:30, and it ends at 12. So everything is Eastern time here, and it also has like two colors. So this ends at 11. The lighter color ends at 11, and then there's another hour or two for the end of the whole trade window. So basically, you trade in the direction of dealers during these time frames. But again, I will dig deeper into this in the video on strategies. Now, let me tell you what are these lines and what are these sentiments based on. So first of all, let's go to sentiment. So the sentiment is simply based on, let me go to our terminal. So E-mini today terminal, and you can see that we have three metrics here in the bottom panel. And so we have a violet one. So violet is the dealers, right? So it estimates or measures the dealers. Then this yellow one is basically the sentiment. So referring to our let me get to the beginning of this. Oh, okay. So let's do this. So basically, the dealers, in this case bullish, is this violet line at the end of the session, right? So we know that that we have a bullish sentiment in dealers positioning based on this violet line. But there's one thing that I have to make clear. This blue dotted line is actually what we are looking for or measuring in sense of tomorrow's sentiment of dealers. That's why we have these two lines. So this is like the current expiration throughout the current session, the violet one. But to know what will be the dealer's sentiment for the next upcoming session, we need to get this line, this blue line here, and read it at the end of the session, at the end of the US session. And the same goes with the sentiment. So this is basically the 25 delta market skew, a bit transformed approach. And basically, whenever it ends the session above zero, it's sentiment bullish. When below zero, sentiment bearish. And when it is zero, then it's neutral. Okay, so the dealers is this blue line at the end of the session. Throughout the session, it's shown by this violet, but that exact sentiment, which is indicated in the study, is based on the end of the session blue line here, right? And the sentiment, so this one, is based on this yellow line at the end of the session. So the skew, so the option skew. Okay, so these are the sentiment indicators which are available in this particular study. Like I said, there is one more sentiment indicator, but it is not updated at the end of the US session. It is updated like an hour or two after the European session starts, and this is not on this chart. It's the GEX, and it's on the GEX study. But for now, and for the trading plan, this is the one that we are basing the coloring of the levels. So we pick the side in which we want to trade during these trade windows based on the dealer's sentiment, not the overall sentiment of options market participants, but on a dealer's sentiment. Okay. Now the levels. So what are the levels from? Where are the levels from? So the levels are basically based on, if you have access to my Substack, and you go to any of the structure plus overnight bias. So these are the levels. It's exactly the levels taken from here. But you can see that the coloring of this chart of these levels are a bit different because there is no direction here. Okay, the direction is made by the study for Sierrachart and Ninjatrader, but the levels are here. So basically, there is this average, which is just the midpoint between support 1 and res 1, so resistance 1. And algo just picks the side. That's why it colors the average either green or red, and also the support or resistance, depending on which side you are trading. But these gray lines all between the average and support and resistance. So let me show you here. Right, so these gray dotted lines here are exactly most of these lines. Now you can see that you have like res 1 zone, it's red, then average resistance is red, then resistance extension is red. So the extension and resistance 1, they are just colored gray, and the same goes beneath the long zone. So if you go to Substack and you compare these levels, these are exactly the same levels, but the coloring is simply based on the dealer's bias, right? So the dealer's sentiment, but all the lines are the same, and the coloring is simply based on the direction, but also if we have a bullish sentiment like here, we will pick the support 1 zone, so this one, and the average as our like a pivotal or supportive level. And all the levels in between these lines are going to be these dotted lines. And what it is and how we use it, I will explain again in a strategy video. But this basically, the distance, because you can see that this is equally distant, right? So every line here is distant. The distance between one to another is the same. And this basically is the unit of risk, right? So this is what we call 1 unit of risk, and it's the same here, here, here. So for the whole day, our unit of risk is going to be like this is 49.15 and 49.09. So the unit of risk is 5 points, right? So this is going to be important in a strategy video. So yeah, this is our unit of risk, because when we will operate not in sense of points like with targets or stop losses. We will operate in units of risk, because let's say we want to have 2-to-1 risk reward or something like that, then we need to have some perspective on it, and that perspective is given through the unit of risk, which is not like a fixed thing. It will for every day will have its own unit of risk based on the options data and the volatility of the market. So you don't have to like adjust anything. It just automatically to the volatility of the market. But again, this is for a strategy video. Okay, so the next tool we'll talk about is ladder. So the ladder is actually just 4 of these channels, and the ladder is something which is dynamic. So it basically changes throughout the whole session, overnight session and RTH session, right? And what is based on is basically it's basically this this terminal tool. I think it will be better visible on options ladder AES. So you can see that there are 4 prominent price zones. So the highest one, the higher one, the lower one, and the lowest one. So basically this is what you see on the tool. Okay, so this one is this one is here. So these are 2 red zones, so something like overbought, and these 2 are here, so the 2 blue. And just something for you to remember, these are dynamic tools, so they will change throughout the session. As you can see here in the terminal, it goes up, and then it goes flat, but basically they will fluctuate. The greatest fluctuation will be at the open of the market, and then it stabilizes. Also in overnight, it's pretty stable usually. But one thing to remember is that all of the tools that I'm showing you today should not be used before, let's say, I don't know, like 18 p.m. Eastern time. So In Europe, I think that it would be safe to say that, okay, probably at 6 a.m. in European morning, it's okay to start using the tools. It simply is because of the volume on options market that needs to, just generate some, significance. So there has to be some trading done before you start using the tools. And they are in the first 1 or 2 hours of options trading, they are pretty unstable. So they will change quickly and fast, and then they will gradually stabilize. So I would look at these tools starting at 6 a.m. in Europe, or 18. No, not 18. Sorry, or at midnight Eastern time, right? So because it's a 6 hours difference, so not at 18. So what it basically represents, this is obviously based on the ongoing calculations made on the option chains data, and this is something that I find much more efficient and useful in sense of looking for a large call or put walls, like a lot of people is looking for these high volume or high OI or high gamma strikes. So this basically is something like an average of these important parts. This will usually this will be very, very good support resistance, and it will usually contain these highly important strikes. So probably somewhere here was a very prominent call strike. Somewhere here also. Somewhere here and here was some kind of a prominent put strike with the high gamma, or maybe extremely high volume or OI. And this is basically my approach to figuring out which strike, which price is the best. It's actually not just one strike, but it's it shows you the surrounding of these strikes. It takes kind of average of this highly supportive of or resistive strikes, and it simply draws this kind of channel. And I will talk more about this tool in a strategy video, but the one thing that is, I think, pretty clear is that it simply serves as a very reliable and good support resistance zone. There are some features of this tool which are important and kind of well, I'll give you an example. So if in overnight we hit either the upper or lower zone, the next part of a session, you have like about 70% chances that it is not going to go the other direction. So what I mean here is, let's say that in overnight, so here price hits the first or the second one. So later on during the session, there is a very low probability that the price will continue to go down, and it will most likely go up for the remaining of the session. And you really don't want to trade through with these red zones. So it's if the first level which is hit during the day is the buy level, then these red levels, these sell levels, have a lower probability of success. So the features like that, the things like that are the details which have some probability meaning and probability value, and I'll talk about it in one of the next videos about the strategies. But this is one important thing which you can take out right away, is that when you see that this happens during overnight or later on in RTH, like the first level which is hit, if it's blue, then the reds are less significant. If the first level would be red, then the blue levels, so the bullish levels, are less significant, right? So this is exactly the Friday situation when first we hit the, I mean, I don't remember if we actually hit them, but let's say that this is the situation, and price first hits the bullish levels. So then I wouldn't count on some major reversal in the red level. They can still work as some kind of a resistance, but the probability that the trend of the day is going to reverse to the downside is much lower than before this happened. Okay, so that would be the ladder tool. And the last one is the London GX, or London Gamma Exposure Calculations. And one more thing I forgot, the dots, right? So the dots, because a lot of you asks about the dots. So okay, maybe I'll talk about it after I'll review the London GX. Okay, so what is London GX? Well, these are the calculations which are made about 1 hour to 2 hours after the European start. So somewhere between 4 to 5 a.m. it will automatically update. And you can see two things here. You can see the levels, but also you can see that there is a GX, and it states either bearish or bullish. And this is our third sentiment metrics. So in the trade plan study, we had two of our sentiment metrics which are updated after the US session closes. So these are bullish sentiment and the sentiment, overall sentiment of the market participants. And in London GX, we have the last metric, again, which is updated a few hours later after European session starts, and this is a GX sentiment, and it can be either bearish or bullish, right? And so once we have all these three metrics, we can do like the swing trading analysis based on these three sentiment metrics, which I will show you in the video about swing trading strategy. But overall, this is when you have the complete overview of the sentiment for upcoming US session and the second part of European session. Okay. As to the levels in here, where does it come from? Well, it comes from our dealer's dashboard analysis, which is updated again during the first 2 hours of European session usually. It's because that we already have some updated OIs on a CBOE website data on option chain, and these are all the calculations which are made from our Substack. So let's see, where is it, right? So basically, if you go to my Substack, this is London GX, right? Plus the trend phase. We are going to talk about the trend phase in few next few videos. These are basically our 3 metrics. Okay, so first of all, where does it come from, the GX, bearish or bullish? Where it's basically these support SR1, support resistance SR1 and SR2. So SR1 is that solid line, blue line, and the SR2 are the dotted ones. Okay, so it's probably a bit better visible. Let me see this. So when we go to structure, you can see here that all these parts are updated after the session. So you have SR1, SR2, the 0 gamma, and then we have normal range, max 2, max 1, max 0, overbought, oversold. So these are all these levels, right? But it picks up the most important ones. So this is, for example, this is Friday. So when we have when did we have the update? So somewhere here, so at about 4 a.m. Eastern time, this whole indicator updates, and these are the levels that that are going to be updated. So it's basically the same levels from here, but as you can see, we have much fewer levels here. It's because the algo here, picks out the most efficient one, the most probable ones, and it also unclutters a chart a bit. And basically, over these months when we were testing these levels, this is what's left, as the best, in sense of probability of reaction. This is what's left. So we only have the overbought and range, max 1 and 2, the SR and SR2, and then there is a 0 gamma. You also have a date here, so you will know that if this is updated, because if it's not updated, it will show you the yesterday's date. Okay, and when it's updated, you know that it's updated because this current date. Then we have the opposite of this, so minimum 1 and 2, and oversold and range. And this basically is, maybe some of you remembered that I was talking that much more reliable level in the structure is the second one hit. And not all of you understood this, what I was talking about. So basically, if, let's say, we have a overbought, let me zoom it in. So we have an overbought and then the normal range. So this is the same pair of levels. So this one is much more important to me because this will be the second level to be hit from this pair. So the first one is overbought, and the next one is range, the normal range. And that's why this indicator, it picked from overbought range pair, it picked the higher one, right? And this is why it doesn't show this lower overbought. It only shows the higher level, which is much more reliable in this case. Okay. Again, the sentiment of GX, so either bearish or bullish, it's a very important metric, and it is basically based on the where is SR1 in relation to SR2. If it's below SR2, then the GX is bearish. So this is like something like 2 averages, right? So if SR1 is above SR2, then the GX is bullish. The sentiment on GX is bullish, and like I said, it's going to be very important in the strategy, the swing strategy section. But if you would like to have the highest reliability of the let's say trading plan, you want to have all these sentiment metrics in the same direction, right? So you want to have dealers bullish, the sentiment bullish, and also later on the GX bullish. Then, like, you have, well, probably about 30% less trades with the trade plan study, but the reliability is I don't know, maybe like 10 to 15% better, something like that. So the accuracy and the number of losses will be significantly lower. But again, the price that you pay for this is that you won't be able to trade every session because of that, because it will eliminate some of the trades. Well, simply because you have a conflict between the one of these metrics, right? Okay, so this is London GX. I will probably add the outer levels, like a total maximum or a rally and a flush level from here, because some of you wanted it to have on charts. You can see here there is a rally level and we don't have one here. So I will probably add it. So let's just get back to these dots. So you can see that there are, where is it? Okay, here. So there are 3 charts, and on these 3 charts there are different dots, because as you can see, this chart has the dots are placed in a bit different candles than this one, and obviously than the first one. So I explained this in a chat room, but I will repeat it here. These are based on the tick internal, right? So what is a tick internal? You can read online about it. You can go to Investopedia and go and look for the. Basically it's the number of stocks which are at the moment ticking up versus the number of stocks which are ticking down. So uptick versus downtick. Let's say 500 stocks of S&P, and this is actually what is based on the tick for the NYSE, right? So if you go to studies, you can see at the end there's a symbol tick NYSE. So this is based on the NYSE. You can actually unhide it. Okay, so this is tick, right? And you can see here in alert that this will alert you over 1000 value and below 1000 value, right? So this is below minus 1000. So here is 1000 and here is minus 1000. And it will alert you when there are these extreme readings on the NYSE, so New York Stock Exchange. And basically, if this is Friday, then you can see, by the way, this is based on a 5-minute chart. So if you change the time frame, you will have a different readings. But I suggest that 5 minutes is pretty okay here. So basically, it alerted us here that there is an extremely low tick below the minus 1000, and it will usually indicate some kind of exhaustion of market, right? And this combined with levels, with let's say the London GX or the options ladder, well, it's a pretty good signal itself. For example, if you're trading some kind of order flow technique, just to have this this market internals plus the options levels thing. I'm sure it will, help to make a decision. So this is based on NYSE. On this chart, it's based on the SP, so S&P alone. And on this chart, it's the it's S&P 2. So here is a NASDAQ. So in this chart book, ET Options Full 1, you have basically, let me close it. You have S&P, so the dots based on dots based on NYSE, and these in my opinion are the most reliable dots, so the most reliable signals. Then you have S&P market internals, and usually it's a lot of them, like here. Not always, not every session is like that. And then this is S&P again, but here is a NASDAQ. Okay, so there's much less of these alerts, but again, like I said, the most reliable I've found so far is the NYSE. So it will be, and the threshold is 1,000. For S&P, the threshold is 300, and for NASDAQ, it's 1,002. Also 1,000, the same as on NYSE. So these are basically what are these dots based on, and this is not a part of options, right? This is just very regular and widely used metric, which is provided by the exchange and widely used by a lot of traders. And I added it here because I want to have these alerts, especially here from the NYSE. And there's also one more thing. If we go to options full to, no, it's not this. Oh yeah, here. So you will see these. Let me see, which one is it? Oh, this is NASDAQ. I thought this is. Let me switch it back to NYSE. It's the New York Stock Exchange, and the alerts are 1,000. Okay, right. Yeah. So this is it, and so you will see also the coloring of these of candles, of bars. Right. So it's either red, dark red, and green, and light green. This is basically based on an ADR. So this is another internal, and it's the number of advancing versus declining stocks at a given session. Okay, so yeah, you will. This is kind of like a trend. A trend overview. I'd say. So if it's green, and again, this doesn't have anything to do with options. This is just the metrics that I also watch to see basically if the futures market is actually following what is going on majority of stocks. Because we have there is this Magnificent Seven, right? Which the volumes there are combined are larger than the rest of the market, right? But I want to know if the futures are going up, for example, and the whole market is also going up. And we have a great example here when the futures market goes up, and you can see that we have red ADR, which means that the majority of the market of the stocks is actually falling down, but the futures market is going up. So this is kind of a divergence that when I see this, I know that the next session, the probability of the next session going higher is much lower. Actually, the probability that the market's going to fall and revisit these trapped shorts is quite significant, because these are not trapped shorts on futures. These are only in futures. These are trapped shorts also in a stock market, in a broad market, right? So yeah, so this is what I want to see. This is why I have it on the chart, because I want to know about these kind of days. Okay, that the market's going up, but the futures market going up, but the most of the stocks were falling down. Okay. Yeah, so I think that would be it. So you have ET options full 2 and ET options full 1. Full 2 is basically what I'm using, right? From here you can just pick these charts and copy them, duplicate them, do whatever you want with it, and it's like a kind of a presentation of the tools, of whole tools. This one is all the tools on one chart. It might be a bit messy, but that's okay. With me, it's easy to get used to this, especially if you have like the y-axis and x-axis spread it out. It starts to make more sense a bit, I guess. And how I use these things beyond the trading plan, which is like a focal point of this analysis. So this one is basically if I have a bullish day, and I know I'm gonna trade to the bull side. The way I'm using these, for example, London GX things, levels, is aside of course, the sentiment here, which tells me which way the GX is positioned. It will help me gauge the targets and stops. Because let's say my stop was below this target zone, right? Or let's say here, 49.32, something like that. And then I have this support here. Let's say this is support, not a target zone. So 26 and 21. Then I can see that the very important level SR1 and SR2 are here close to this, and the lower one is 1980. So this is like just 2 points below this structure here. So obviously my stop is going to go like 1-2 points below this GX SR1, and this is why I actually have this on one chart. You can see here, let's say that I wanted to have stop loss below this, but I can see that this blue line here is very close to it. So my stop will be, let's say, somewhere here, right? So I have like 3 levels lying close to each other. So this is where I'm going to put my stop. So I don't want to put my stops or targets 1-2 points below or above these GX levels or the ladder levels, because I know they are highly reactive, and I don't want to get caught just point from this major level, and then the market magically turns when you think, oh my God, they hunt stopped my SL, right? When in reality is that there was a very important level there. So basically this is why I want to have this overview and in placing my targets or stop losses. But more on that in next video on strategies. So this is the overview of the 3 different studies. Also, forgot to mention one thing, that London GX is also the static one, and it is not changing during after it's updated. And again, this is updated about 1 or 2 hours into the European session. So basically at about 5 a.m. New York time, it's updated, and it will stay like that for next 24 hours. Okay, so the only one which changes like every minute is this one, the ladder tool, and the other ones are not changing, but they are updated at different times. So this one, the trading plan is by the couple hours after US session ends, and the London GX couple hours, 1 or 2 hours after European session starts. Okay, I think that's all, and the next video is going to be on the very basic strategy with the automatic trading plan study. So this one here, and I'll talk about some stats. I talk about some entry techniques and also the risk management. So see you in the next video.